Hey everyone, welcome to the Everything Money Show. It's your Uncle Paul and Seth here. As always, we are here looking at real estate, business growth, stocks. A lot of stocks this year, Paul. Stocks are going crazy. But today, we're going off the chain a bit. Our patrons are asking, why do you guys always do stocks? And so we're getting back to the sweetheart of the love of your life, which is real estate, Paul.
I actually love stocks. I mean, I love real estate and stocks both very, very much. I don't think there's a favorite.
Why do you love real estate so much, though?
I feel like there's a better ability for me to generate better returns because of my abilities in real estate. With stocks, if you own a portfolio of stocks, I can't go make those companies better. But I can do it with real estate. I can go sit there and go buy a piece of real estate and go, oh, I have extra cash flow. Let me go upgrade things, make them nicer. Let's go make more efficiencies. We have a lot of expenses here. Let's go put a big number in there to drive these expenses down, et cetera.
I think things that a viewer like yourself might be wondering is, how does this work? I've listened to him, Paul, talk about real estate for many years now. Like, what are I think, Paul, some of your take homes on real estate is like, you want to have the nicest property on the block, right? That's like one of your most important features.
Yeah, I don't care what the market is, but I want to have the best property on that block. I want to convert it into the best property on the block.
And so with this said, where am I coming from? I have a father-in-law, Paul. He's one of these old kind of grandpa dads that has like 13 units. He's been in real estate his whole life.
Yeah.
It took up a lot of his Saturdays.
Yep. And
you and I have discussed that I have my hands in so many different projects that I'm not necessarily dying to take on maybe something that wouldn't be worth my time and effort. But I'll tell you why I brought you this deal today. I have a friend in Columbus, actually a mutual friend of ours, Angie. She's been on the show.
Oh, yeah.
She owns a hair artist studio, hair salon. The Greek, yeah. She owns a hair salon in Columbus, Jekyll and Hyde Salon, and her dad owns about 50 units. He's one of those dads that, like, what does he do? Well, he's just always busy running around with a truck and parts of toilets in the back of it. And they had a couple properties, and they just got a 6-unit in Columbus.
Oh,
they're very happy. I didn't ask about the deal, but it kind of got me fired.
Angie did?
Yeah.
Oh,
and it kind of got me fired up because we've talked about the idea of investing versus like speculating on stocks. For me, it's magic cards that I'm into, right? Because
which are fun.
They're also fun. So with all this said, I'd love to take a look at a deal in my area.
You sent it to me this morning.
I sent it to you this morning. I'm a little fired up, and I'd love to see you either rip this to shreds or say...
And keep in mind...
Go ahead, Paul.
You sent me the link. I did not open it. I was in the middle of stock stuff, and I just said, and you said, let's do this. I said, on the live stream, you said, let's do a separate episode. I said, perfect. So this is completely... All I did was load some information here that I asked Seth for, Uncle Seth for.
So what I would say to folks is if as Paul says all the time with our stock analysis, there's thousands of stocks out there, and it's not our job to just buy. You need to look at a zillion of these houses. I told this to my wife this morning, is like, I have no expectations. Before, Paul, I'd fall in love with this house just because of the location, the way it looked. And now I realize that, like, this is probably a no-go until Uncle Paul runs it through the numbers. So talk about this program behind you, what we're going to do with it.
Okay, so this is RE Calc. We created this. It's Real Estate Calculator. I created this internally as a way of us. I had this Excel sheet that was convoluted, and I was always changing things. I wanted to create a program that allowed us internally, we use this, to look at every single deal that comes across our table that we want to take to the next level. I also did this because I want our users to be able to use this, because I think people create these super extensive, complicated Excel sheets, and all you need is income, expenses, IRR, cash flow. That's all that matters, is that all feeds into cash flow, which spits you out an IRR. At the end of the day, an investment is just the present value of all the future cash flows. That's essentially what this
Say
does.
that again?
Every investment value today is the present value of all the future cash flow you're gonna get from it.
The present value of future cash
Think about it. If you're gonna make $1, $2, $3, $4, $5 over the next 5 years. One first year, 2, 3. Actually, to make it easier, let's say for the next 5 years, you're gonna make $1 a year. Okay? How much you wanna pay for that today?
So I'm going to make $5 of total profit over the next 5 years?
How much you want to pay? You want to pay 6?
No.
Of course not. Or you want to pay 7?
Of course, no.
Would you pay 1?
Oh yeah, that sounds
Would you pay 2?
So you say this a lot when like what looks like diminishing companies still have value that you need to figure out.
Yep. So I look at it saying, that's all we're looking at here, but the issue, the difference with real estate and stocks is sometimes when real estate values go up for no reason, because the revenue haven't gone up because of other reasons, then people think that, oh, I don't have to worry about the cash flow. At the end of the day, it's still a cash flow.
Okay, you want to start talking about the actual deeds of this property?
Absolutely. So this is the real estate calculator. I'm just going to show you. I put in 2 units. I put in a standard appreciation rate of 3%. I put a vacancy of 10%. They're asking 124.9.
Yeah, this is just a house in near my hometown of Barberton, Ohio. We're in Ohio here. Paul, I look
20 minutes down the road.
Well, that's nice because we were looking at a lot of Cleveland houses that are 40 minutes around,
Yeah.
so this is very close. I always love going on Google and looking at all the neighbors, and the houses look nice. The sidewalks are new, Paul. There's not broken down cars with no engines on the street. There's not oil stains all over the street. Am I crazy thinking about all this stuff? Or
No,
just
it's
go
a
through
smart
your mind?
move.
Okay, keep going. So 124.9,
So-
they want the house. It's a 2-unit, Paul, which is good.
7% cost to sell. Someday in the future, you have to sell it. You have to pay somebody to sell it for you. Commission's probably about 7%.
That's never gone through my mind one time when it comes to these properties.
Of course not.
Okay, keep going.
But at the end of the day, it's still a loss of cash flow in the future. So you'd still have to calculate it in there.
You're right.
It's still a cost.
You're right.
I'm doing a 15-year analysis. I just picked 15 years. That's what we pretty much always do.
Okay.
7%. Now, this one I won't get into, but I'm basically going to assume that when you sell it, you're going to sell it for a 7% cap rate. Let's not get into that right now. It's a valuation metric.
Oh, boy.
Yep. And you're going to have 1% financing fee. A bank's probably going to charge you 1% to finance the place.
Okay.
Income. You told me there's 2 units.
Yep, they're getting $800 for 1 unit currently and $900 for another unit.
It's a 2-bedroom and 3-bedroom. I put average rent of $850 because it's $800 and $900.
Okay.
No other. Oh, you said garage.
Yeah, they charge one of the tenants $300 a year for a garage. Now they also said that the owner.
I'm not going to put it in actually.
Okay. They said the owner pays all utilities.
Okay. So let's go to expenses now. What's the property tax rate in Barberton?
They have taxes here, Paul.
Well, the tax is going to be based on a different number.
Oh. Whoa. I'll look that up. Tell people what you're talking about.
So, guys, this is the biggest mistake that every real estate investor makes. They buy a property and they look at the taxes the current owner is paying. But the taxes the current owner is paying is based on their previous value that they paid. When you pay a new price, the taxes will go up. That is almost a guarantee. So when people sit there and underwrite it on previous taxes, I always go, and I get deals all the time in which an owner bought a property for $10 million and they're selling it for 25 right now. And I sit there and say, listen, your taxes are $200,000 a year. If I pay you $25 million, they're going to go to $400,000, $500,000 a year. I can't, that drives the value down. So it's something you really need to keep track of. And it's the biggest mistake every new real estate investor makes. Every single one. So that's that on the property taxes. In this area, I imagine it's going to be around $2,500, probably 2% or something. That sound about right? By the way, I'm going to analyze this deal like Seth is going to buy it, not like I would buy it. It's going to be a lot lower in expenses if Seth buys it.
So the taxes here that says $1,620 sounds a little
year?
low. That's what it says. Yeah, it just says
Okay.
property taxes $1,620.
Okay, let's put 2,000 because I don't know what that. We can look up what that basis is on, but let's look up 2,000. Let's put it 2,000 just for now.
Okay.
We're not going to put a management fee in because Seth's going to manage this thing himself. He's going to do all the work himself. Leasing commission, same thing, nothing in there. Insurance, what's a 2-family insurance?
Your Uncle Paul and you.
Probably 1,000.
Okay, go on.
Okay, maintenance staff, 0. Seth's gonna do the work or he's gonna hire somebody to do it and be part of the maintenance repair number. Leasing staff, 0. Seth's not gonna have a leasing staff. Property manager, 0. Now maintenance or repair, this is where we're gonna pay for all your labor. If you can't do it yourself, you're gonna have to hire somebody to do work for you, correct?
Yeah.
So
I would say like that would be things like the heater, maybe the water heater,
Yep.
the AC, HVAC, electrical for sure if there's something majorly wrong.
let's go $1,000 per unit, so $2,000.
A year this is?
Yeah.
Okay.
Capital expenditures. Now this is a hard one because it's a small house. It can be skewed but basically you have to sit there and say how much you're going to spend per year on capital expenditures. I'm going to call it another 2,000. That's probably high. No advertising, no accounting, who pays landscaping? You probably will, right?
Is that what normally happens, or
On a 2-family like that, probably.
so I pay a company to
the
come
grass.
cut the grass? So what's
so
that?
probably 26 cuts a year. How much per cut? $30?
You think 30?
Yeah.
Okay.
Snow plow? Oh, you think higher than 30?
I was gonna say 50 for cuts.
Okay, so $1,000. Snow plowing?
Snow plow. Gosh, I never thought about that. Because we're in Ohio.
Probably 500. So utilities. Let's talk about gas, electric, water, sewer, etc. He pays all the utilities. The owner does.
That's what it says. Yeah. So he has a gross income of $1,700, net operating income $500, operating expense of $1,200. That sounds like a month.
Yeah, that's a pretty generic number.
I would say so. That sounds like they're made up anyway.
So he pays all utilities?
It says he pays all utilities, Paul.
All right, so what's that? I mean, let's say gas is $40 per, so it's 80, it's 1,000. Electric's another 100, 224, that's 3,400. Water, sewer, another 100, so $3,600. Let's just call it all utilities. We're gonna put it in the miscellaneous category of $3,600 a year. Next, refinance. We're gonna refinance the end of year 7. 1% fee, loan to value, 75%. We'll call it 5% and 30-year AM.
Okay, what does all that just mean?
So in 7 years, you're going to refinance the property.
Why is that?
Because you want to take capital out. If the property's gone up in value, you've paid down debt, you want to take some of that money out and go do it again.
Do it again, okay.
We're going to refinance 75% LTV, 5% interest.
Okay.
Your current mortgage, we're going to sit there and say 75% interest rate. What's the interest rate on a home like that right now? 4%. If it's an investment property, probably 4.5%, because they're not going to give you a great rate.
They're not going to give you a great rate on a low.
I mean, it's considered riskier. They might even actually charge you 5%. I don't know. It's like,
this is riskier. What if we what's the difference in paying cash? You would not advise that.
Well, no, you can use good debt at good rates to go get a higher return.
Okay. What would the bank give you a better rate if you have the cash, or
banks will sit there and tell you that, and it's basically a lie.
Really?
Yeah, bankers' jobs are to lie to you to get you to do a deal with them. They'll sit there and say, "Oh, we can do this, and then they're like, you know what? Went through underwriting, can't really do it, but we're all set, ready to go at this rate."
Is that how they get you?
Yeah. Actually, I'd probably put 5% in here. In fact, you know what? Do me a favor. Text Hesh and ask him right now. Just say, "Hey, Hesh, if I want to buy a 2-family in Barberton, what's my interest rate going to be?"
Okay, Hesh Sagafi's describe who he is, Paul.
Hesh is a great guy. He's been on our podcast before. He runs a really large mortgage brokerage here in Cleveland. The guy's been through hell and back and still keeps coming out on top. It's a great.
You know, I don't have his contact in here, Paul.
Okay. So let's just sit there and put 5% in. The goal here is let's beat it up a little bit. Let's put it in there and see how it turns out.
Okay, keep going.
Let's create the deal. So now this shows, look, first year, negative cash flow, guys. Second year, 100. So there's not much cash flow here paying what you're paying here. So let's go see the view IRR. Oh boy. 6.34% over 15 years.
So on our end, as a viewer, you just clicked a couple buttons. So what really just happened here?
So it takes all the information I gave, it puts all the years of data, increases the expenses and revenue by 3% a year, takes all the data we've done and says, here's your cash flow by year, and here's the IRR at the end of the day. And that IRR is 6.34%. Now, how do we change IRR? You can change IRR by decreasing how much you pay for the property because it's less capital out of your pocket. So this little bar here, I can adjust this up and down. So let's take it down to 110, essentially, right?
I thought about that. I mean, you might come in with a pretty low offer on this thing, maybe a 98 or something at one, and see where you end up at, right, Paul?
We adjust this price to 109. It makes the IRR 11.53%. Not good enough. I'm going to tell Seth, don't do a real estate deal unless you're going to make 15%. It's not worth the hassle.
Just like that.
Yeah, why would you ever do anything? You can invest in stocks for 10% over long periods of time doing zero work. Why would you waste your time doing it for 11.5% here?
And what is the work that maybe someone who's getting into this is not maybe understanding? What
well, tenant moves out. You got to clean it up. You got to get it rent ready. Leasing it out. Your calls when they say, hey, my furnace is broken, whatever it is, that's hassle. Hassle is worth money. Hassle is worth return. Do you know what I mean? So you got to sit there and figure these things out. So to me, when people are doing real estate deals at 9 or 10%, I'm like, why? Go invest in stocks over a 30-year period. You'll probably get pretty close to that with a lot less hassle. Are there tax benefits to real estate? Sure, but never factor in the tax benefits to you when you're buying real estate. Everyone gets that no matter what. It's not like you can do anything different to make yourself get more or less tax benefits. So when people say that, just tell them to shove it up their.
Okay.
So now I'm looking at going, how do we get 15%? Okay, that's 23%. So I'm just adjusting this calculator here. There we go. So basically your number is $103,000, $104,000. One of the big factors here I did was expenses per unit. That seems high, I'm not gonna lie. Expenses per unit do seem high.
How much were you?
Seth, I'll be honest with you. It's hard. So that's the thing. This is the art part of investing because we don't know what it's gonna be. I'm looking at this saying, okay, $815 rent, $900 rent. I mean, does it seem reasonable to pay $50,000? Yeah, it does seem reasonable to pay $50,000, $60,000 per unit. But I also look, how clean was the property? Was it very clean?
Very nice. White trim, looked really nice.
Okay.
It looks really nice, Paul. And like I said, the street looks really nice. I was thinking about driving them. I mean, really nice. I mean, nice houses all around. This is probably the thorn on the street.
Okay.
However, when I was looking up comparables, Nathan, our associate producer, Paul, was 3 bedrooms were going for $815, 2 bedrooms 770, 675, 655. So maybe these. I'm hoping these numbers are true because they.
So this is a very common mistake, a very common thing people do. When they're selling a property, they're going to put very aggressive numbers in there because they're going to have somebody new say, oh, I can get these, but you did your due diligence and you went there and did a quick search and said, Craigslist?
Yes.
Craigslist and said, what are rents going for? Oh my God, they're not even getting these numbers.
Yeah,
now, if your unit is much better, you can get those numbers, but I wouldn't go in. If you go in with all optimistic and rosy assumptions, you will have mistakes. It will cost you money. If you go in with all negative assumptions, everything's gonna be the worst thing possible, you will never do deals and you'll do deals that are just inaccurate. So there's a healthy balance. That's why you pick in the middle. Some you'll do better, some you'll do worse. That is the point. You sit there and say, okay, well, I think I can get 800 to 900. Let's put 850 in there. I think I can operate this property for between 5,000 and 6,000 per unit. Put 5,500 in there. Give your low range your high range. I do the same thing with stocks. I sit there and say, well, this is my low range of the stock, this is my high range of the stock. It's probably gonna be somewhere in the middle there. Let me just pick the middle. That's the whole point of this. I know it doesn't sound very scientific, but that's okay because your job is to sit there and do several deals and know you're gonna be right. The whole point is your process a good process to picking your numbers? If that process is good, you will do well over long periods of time. You might do better on some, worse on others, but that's the point. Over a long period of time, overall, you'll do well. So Seth, I mean, am I opposed to this thing? I mean, let's put in.
It doesn't sound like a screaming deal, but I always figure if they hit MLS, you've probably lost out on any screaming deal, right? I mean,
yeah,
if everyone has view to it and still, if everyone can view it and still sitting there.
Yeah. I mean, Seth, I think if you can get it for low ones, like, no more than 110, 115, if you can keep these expenses low. That's the thing. You just got to keep the expenses low. How do you do that? Do a lot of work yourself. The question is, can you do the work yourself? Because a lot of people will buy 20 units as their retirement plan. Like, listen, every Saturday I'm gonna do all the work for these units that I need to do, and 30 years from now, I'm gonna wake up and have 20 units paid off in cash that are generating me $100,000 a year in positive cash flow. I can live a good retirement.
My wife's father put four gals through private school. They paid for half of college and 4 gorgeous over the top weddings, all with this real estate money from between 10 and 15 units over the past 40 years.
Yeah.
So
and that's possible. It's just you got to remember what your goals are. If I were I could never buy this property because my expenses are a lot higher. I have a management team, I have staff. I have to put all those costs in there that Seth doesn't have to, that the average person does not have to do.
Well, all those costs actually, when if you're viewing this and wondering, getting in maybe your first property, all that came at a cost. In that now that his children are in their 30s and 40s. Some of them actually missed dad most of their life.
Yeah, but you guys are making up for it now.
We are, but I mean, that's maybe something that doesn't.
I've always said to people though, real estate isn't as much work as people make it out to be. People always say, "What happens when somebody calls in the middle of the night?" I've had 1,000 units at any given time, and I've gotten one call in the middle of the night, and I was just like, what the F? And I literally told the person they had to move out for doing that, because it was a ridiculous request. I mean, it's the middle of the night, guys. It was Christmas Eve, 2 o'clock in the morning, and I was like, I can't believe I'm getting a phone call right now. And by the way, it was because of a leaky, they said their ceiling was caving in. She literally said to me, I have a friend who lives on the street, can they come look at it? The friend came, called me, and goes, yeah, she's exaggerating. There's literally a small leak in the ceiling. So those are the things that are gonna happen. But then you'll also find other people that don't even call you when they have issues because they don't want to bother you. And then they move out and you find out there's a disaster zone inside. So these are this is all part of it. It's just, you decide what's right for you. I just don't think real estate's worth doing unless you're gonna make 15%.
Thanks for watching the video. As always, make sure you smash the like button, just give it a little tickle. Subscribe if you want more of this. We talk a lot about stocks, real estate. We do have a Patreon, patreon.com/everythingmoney. The description is below. Go ahead and check it out. We have different tiers where you'll have exclusive access to Paul, this calculator, Paul, in the future, and our app that's coming out here in the next year for stock analysis. So thanks, Uncle Paul. We're going to look into this, and we'll update you guys, the viewers, if maybe I get a look at this property.
Sounds good.
Thanks for watching, guys. Appreciate it.